There we go. Hi, Jason.
Hey, Brent.
Good seeing you again.
You too. I can't imagine people are very excited about two bankers being on their screens.
I can tell. Well, let's talk about something exciting, okay? Let's talk about digital banking. Now, digital banking's been around a long time. I've got the gray hair to prove that I was involved in some of the first digital startups in the 90s. And the first digital bank that everyone knows about was ING Direct, which is now Tangerine Bank, run by Scotia in Canada. Still very big, very profitable. Then we had HSBC that launched First Direct in 1989, another one that's still around, very profitable. But if you go onto the websites, or let's just say you go onto the internet and you do a search, bring up digital banks, what you get is you get a whole bunch of newcomers, people like Borrow Money, Simple Bank, SoFi, Bank Mobile, Chime. You see Chime ads on TV all the time now. Tell me, Jason, what do you think is the status of digital banks? It's not new. They've been around a long time, but what's different?
Well, as you say, Brent, we've had some great innovators around for a very long time. The guys you mentioned, First Direct in particular, did a phenomenal job. And if you think about it, it was more than 20 years ago. In some respects, they were sort of ahead of their time. We weren't ready for it. We didn't necessarily have the level of confidence in the delivery of our financial services through a digital platform that we have today. Perhaps we weren't tired enough of going to our bank branches back 20 years ago. But what we have seen now, so specifically over the last sort of 7 years, has been an improved regulatory system where licenses not only for real banks, deposit-taking banks, but the so-called neobanks, which are really front ends, have opened up. So we're having some great innovation in the appetite to license fintechs and others in this space, and that's brought in a real sort of post-internet craze around what can be done to add more efficiency, to reduce some of the legacy issues that surround monolithic banking structures, and bring a sort of millennial feel to not only retail bank but increasingly also commercial banks.
So, I think you're correct. The time is right. Everybody's into digital banks. People trust them now. The regulators understand that this is the way of the future. What do you think the relationship between special economic zones and the banking industry is going to be going forward? Since a lot of the new digital banks are being opened offshore in these SEZs, what do you think that holds for the banking industry going forward?
That's a great question. So many of the leading retail banks are obviously focused on onshore presence of millennial customers, retail customers. They're holding balances on average of less than $500, but it's not really helping the guys that are on this conference, for example, that are looking at innovative ways to manage their global operations. So what we're seeing is a big disconnect in some respect between the traditional banks who find it very difficult to deal with special economic zones or private cities in certain jurisdictions, and digital banks who are simply not in any way involved in that sector. My bank, our bank, Equibank, is a real focus, has a real focus on corporate. We only do corporate and high net worth banking, but we do focus on innovators, special economic zones, etc. So one of the things that we're seeing in these types of communities where we're seeing some real innovators in the startup space is that even when they are moving into these privileged areas, Dubai International Financial Center, the special economic zone that I owned and formed, Cayman Enterprise City, some of the other ones, they're then not able to get the banking that they need, which really sort of defeats the purpose of moving into these really great, innovative sandbox environments. So Equibank plus basically just Equibank is really focused on servicing their needs. And it's advantageous for a series of reasons for us. Clearly, there is a lot more opportunity to service more complicated lines of business when you're dealing with corporates. So some of the guys that are in special economic zones or certainly innovators in their sector need more advanced features than you would expect from Revolut or N26. They need letters of credit, they need trade finance, they may need sophisticated syndicated lending products or insurance, etc. And that's why a digital bank like Equibank is really starting to carve out a great niche.
So let me, take this off target a little bit. What do you feel about regulation? I know that in the past, a lot of times we looked at going offshore to be able to avoid particular regulatory districts or to be able to avoid onerous reporting requirements that may exist in certain jurisdictions. The SEZs became notorious for places that you could hide things. I've been in the international banking business for 30 years now, and the only thing that I've seen is more regulation, the regulation becoming increasingly pan-national, and the regulators working very much in lockstep sync with each other from jurisdiction to jurisdiction. If anything, I think regulation is going to become more and more unified worldwide, and we're going to see more and more intrusive regulations. So how does that settle, or how does that work for us that are trying to be doing offshore banking or working in these special economic zones? What do you think is the future of that?
Well, Brent, you and I as bankers will often say that banks are mainly just compliance organizations that just happen to do a little bit of banking.
Amen.
And it's at the very heart of who we are and what we do. There was a time less than 10 or 15 years ago where you're absolutely right. It was so fractured in terms of global regulation that it was a real quagmire, not only for banks, compliance departments, but also clients to deal with their international reporting obligations. Things like FACTA, CRS, in our opinion, have actually made things easier. There are standard reporting systems that now leading banks take care of. We take care of much of that reporting ourselves now for clients. They register with us. Obviously, they complete the necessary FACTA and CRS forms. But much of this reporting is automatic and saves the client an enormous amount of time. Many existing banks simply can't do that. Their existing technology, COBOL systems, mainframes, etc., mean that it's a lot easier for these guys just to say, we don't want the accounts. And that happens more often than not. It's too problematic for them to deal with innovators, global organizations, etc., than perhaps accommodating in a streamlined fashion their reporting requirements. We're a little different, and some of the leading digital banks have the same view, which is welcome regulation, because regulation ultimately protects the bank. It also protects the client, but make sure that regulation is managed effectively. And that's our obligation. Our obligation is to make the client experience as seamless as possible, whilst ensuring that we're providing a very high level of fiduciary oversight.
So when Bank decided to go global, how did you accommodate that? And what was the decision process behind deciding to go global and how to manage through the regulations of that?
It took approximately 10 years from start all the way through to launch to get the necessary licenses, correspondence, payment providers, all the usual things you would expect to do. It is very difficult to launch a bank. You need an extraordinary team, you need extraordinary resources as well, and you need a proven background. So we decided very, very early on in the journey that we weren't going to follow the line that most digital banks do, which is retail focus and national focus. There are some great banks, Chime is one of them, in the US that is providing good service for retail clients, and in the UK, there's Atom Bank and N26, and Europe, Monzo, etc. And that's great. They provide very effective retail banking. But what we realized was the needs of corporates, the needs of high net worth individuals who perhaps have assets or interests globally is simply not being met. So our primary obligation from the very beginning was to really do what a digital platform enables us to do, which is provide banking services across the world 24 hours a day, 7 days a week, seamlessly and as effectively as humanly possible. And hopefully we've achieved that.
Good. So how do we get fintechs more aligned with what digital banks are trying to do? Because it's, and I've been telling this to every fintech I've ever worked with, as well as my own colleagues within the industry, that the problem with being a bank is that you got fiduciary obligations and that you've got to build a sustainable model with sustainable practices, because quite frankly, you're dealing with people's livelihoods and monies. Too many fintechs I've seen over the years, and I'm talking about from the dot-com bubble burst of 1999, 2000 until now, too many of them didn't view things with the same sort of mindset that you had to view a digital bank with. And so some of the products were not sustainable. Some of the products were not necessarily expandable, shall we say, nor did they have the resiliency that we had expected and anticipated. So what message would you give to the fintechs that want to do work with digital banks? And what do we need to do to make sure that they don't destroy the reputation or create issues for those of us in the banking industry going forward?
Well, I think there's two interesting points there. The first is really sector selection. It's what is the appetite of the bank? Are you working with a bank that really understands what you're doing? If you're involved in digital assets or cryptocurrency, for example, does your bank want to deal with that sector? Are you being transparent with your bank that is what you're doing? Perhaps you're a fintech that wants to launch into payment services or credit card services. Does your bank want to assist you? So it's really about risk appetite, and what you're finding is that some innovators in this space, including us, are really embracing fintech. So we look forward to opening up our APIs to fintechs that are appropriately licensed, enabling them to use our product sets to go to market with their own services and product sets, whether that be credit card services, payment provider services, whatever else it may be. We don't see ourselves as just a supplier of goods. We see banks as a partnership opportunity. Clients should be partnering with us in order for them to deliver their product sets or services to their client base. So things like open banking standards, open APIs are really allowing innovators to use these structures, these great regulated financial services organizations, banks, in order to build their own businesses. And in some instances, they do a much better job than banks. It's one of the reasons that so-called neobanks are doing a great job in creating front ends which are attracting client attention. They're encouraging people to use these applications to save money or perhaps transfer money or even more innovative structures. So we're one of a handful of banks that really support that industry, and we're open for business and open for partnerships.
So that raises an interesting question, because so many of my colleagues, particularly in the industry, talk about the demise of banking and how they're going to disintermediate banking so that it won't be around in the future and people won't need it. And yet when I look at some of the biggest fintechs out there, Robinhood, SoFi, Chime is even starting to look this way. So many of these fintechs are looking more and more like traditional banks and are going through the exact same teething problems that traditional banks are going through. So where do you see the market going in that respect? I mean, I have my personal opinion that as long as we have governments, as long as we have fiat, as long as we have a monetary system in place globally, that banks are going to be around in one shape, form, or another. But where do you see the future, particularly
ultimately,
digital banks?
Well, ultimately, a deposit-taking institution, an institution that is holding the money on behalf of third parties, has to be extremely well regulated, has to be well managed, and we call those institutions banks today. They won't go away in any shape or form, but they will become the platform on which others are building their businesses, and that's working very effectively today. You may not even know who you're actually banking with in some instances. N26 is a good bank that's in the United States. They don't hold a banking license. They bank through a partner bank. And that's very much the case with many of the fintech innovators. So what you're going to see is you're going to see some fantastic groups coming up that are starting to chip away at the traditional lines of business and the traditional revenue streams of banks, but they still require a partner bank in the background. So banks are going to have to get quicker, nimbler, perhaps more global in nature, and they can no longer sort of rest on their laurels. And perhaps they're no longer going to be able to afford these huge infrastructure costs, these mainframe systems, these big branches, these cashiers' desks, etc., Those are the things that are going to get slimmed down. And that's why leading digital banks like SEZs got rid of those at the very beginning.
Excellent. Well, Jason, this has been a very enlightening conversation, and I'm glad we had the opportunity to get back together and talk about the future of digital bankings and the use of special economic zones, offshore banking, and so many of the topics that are truly what the future of financial services is going to look like. With that, maybe do we open this up for questions, or we have a few minutes left? What do you suggest, Joe?
Hi, can you repeat the question?
It was whether anybody's got any questions of us for the last couple of minutes.
Perfect. Yeah, we definitely have some questions already, and everyone who hasn't sent a question, feel free to do so now. One that I thought was fairly interesting: can you run a white-labeled bank for SEZs?
That's a great question. That's something that's very close to my heart. I've been involved in special economic zones for 20 years. I founded and created Cayman Enterprise City, which was voted #1 SEZ in Americas. So that is very much what we are doing. Equibank is focused on the needs of SEZs, and yes, we welcome the opportunity to talk to other innovators that are wanting to white label specific product sets and specific banking applications for global special economic zones. With more than 3,500 of them around the world, producing nearly $1 trillion a year, it's good business.
The other question that we have is Peter Demandis is predicting an increasingly demonetized economy where bots create a near radical abundance. What scarce goods will remain? Will goods remain the focus of old school web?
Well, I have to think about that one. What? Can you repeat that? Repeat that, or break it up into multiple questions, please.
He has a more direct question. He says, can Enterprise City set up a global franchise for other quick start free zones?
That's a very good question as well. That's something that we're assisting a couple of SEZs on. It's the streamlining or passporting of clients between SEZs around the world. And that has two components to it. The first is the KYC and AML requirements are to establish a corporate in any particular SEZ. But more importantly to that is the way in which we passport their banking and corporate requirements across those SEZs. Following the money between the SEZ trade is something that we have a particular expertise with and in. And I very much welcome a conversation about that offline.
We have is, can you store Bitcoin in Equibank?
Yes, we are licensed as a custodian. We currently do hold digital assets. We're insured through our custodial service with Lloyd's of London. And I think we're one of the only banks in the world that do provide custodial services for digital assets today.
Another one, should we think of blockchain technology, i.e. crypto and contract, et cetera, as future back-end banking? Or should we think of it as much of what we thought of, sorry, the chat keeps moving because people keep answering questions, or should we think of it as making much of what we think of as banking obsolete?
So I think from a fundamental infrastructure perspective, blockchain technology is already being well applied in payment systems and has very, very strong application for trade finance, letters of credit, et cetera, escrow. So what we're going to see is it's going to dramatically increase the effectiveness of existing services by making the core infrastructure redundant. I don't think it's going to replace the actual underlying deposit-taking nature of an institution.
Yeah, let me just chime in on blockchain. I mean, blockchain, there's been a lot said about it, and there's a lot of hype associated with blockchain. Blockchain is no different than when, and I'm dating myself here, when TCP/IP came out. The world was all of a sudden, instead of doing asynchronous or synchronous communication, everything was going to be on TCP/IP, and it was going to completely replace all the technology that we had in the industry. And then TCP/IP became the internet, and then the internet was going to replace everything. So I view blockchain as just a new form of technology that's going to replace a lot of the existing technology that we have and make the transformation and the transfer of data that much more seamless and secure. I don't view it as a Internet of Things that's necessarily going to replace banking. It's a tool set that will be used to replace a lot of infrastructure.
So we are going to go to lunch in a couple minutes, digital lunch with digital soup. But we're having a really cool discussion, so I think we can take a couple more questions if our attendees are okay with that. Are you two gentlemen okay with that as well?
Oh, yeah, I'm fine with that. Absolutely.
Perfect. We have a question from Bradley. How far off do you see standardized banking / reporting arrangements across the developed world?
I think. Go ahead. We have two opinions here, but please go ahead, Jason.
I think certainly amongst the G20 and beyond, we're already starting to see that. The only fracturing point is how quickly regulators are evolving. So you'll see that EU regulators move forward with open banking standards, etc., much quicker than perhaps other jurisdictions. However, it has triggered a move to new licensing structures, especially neo and digital banks. It started very much in Europe. Over the last 10 years, has moved out obviously into the United States. We're seeing little hubs of activity in Singapore, in India, in Japan, in Hong Kong more recently. So we are seeing process improvements. We're seeing some regulatory arbitrage as well. So we're seeing some jurisdictions that are trying to pull in talent pools and monies in order for these institutions to open up in those jurisdictions. From a reporting perspective, we are seeing an enormous amount of standardization through BIS, and we have seen that for a very long time. In the emerging markets, it can be a little bit more problematic, and as you go from emerging markets down into retail or the underbanked, it then becomes a little bit more sort of tricky. But institutional, corporate, especially in the developed world, is, in my opinion, becoming increasingly standardized.
Yeah, I would agree on the G20 model. I think it's already standardized. The reporting aspect, everybody asks for the same thing. They may ask for it in slightly different format, but they're asking for the same thing. They're all doing joint audits. It's pretty much moving in lock-sync, with the exception of certain political agendas. Every country has political agendas. Those political agendas will drive some unique reporting requirements, but take out the political agendas, it's standardized. I think the emerging market, though, is moving in that direction as the currency stabilizes and as the economy stabilizes. I'd like to address one guy keeps bringing up the CBDCs, the central bank digital currency, if it's a threat to traditional banking. My answer is absolutely not. What it's a threat to is the FX business. If we do standardize on a single currency, then yes, there's going to be a lot less money made in foreign exchange transactions than in trading. Personally, I don't think I'm going to see that in my lifetime, for the simple reason that I've watched the euro experience and what's happened over the past 40 years with the euro trying to become the standard currency of Europe. I think it's going to be very hard to have central banks dictate what the digital currency is and then agree amongst themselves as to how unitary values are going to be exchanged and what is going to become what the liquidity of that is going to be. So I see it as something that's going to happen in the future. I see it as a threat to the FX market. I don't see it as anytime. I just don't see it happen. As long as we have national borders and we have multinational political systems, it's going to be very difficult to have a single central bank currency.
I'd build on that a little bit, and I would agree with Brent. I think it's somewhat inevitable that the fight over the currency of last resort will continue and heighten, particularly over the next 6 or 7 years. And there will be an increased push, I think, to a basket of currencies. But whether we'll see that in the next 10 to 15 years is questionable. To accommodate that, obviously, people are rushing in a different direction, which is the use of stable coins and even a basket of currencies representing stable coins. The problem there is we're having an interchange problem. There are so many of these derivatives that are being created. There's no standardization. So as a result of that, they're not getting the scale that perhaps they justify. And obviously, lack of regulatory uniformity of vision is the biggest impediment to the creation of.
Yeah, and if you want to take a history lesson and see some of the challenges that we're going to have with this, just go back and read about the gold standard. You know, we essentially had a single currency for many millennia, or for many centuries, with the gold standard, which obviously in the industrial age fell apart rather rapidly. I think you're looking at a similar situation here. It'd be worth reading the history on that.
Brent is aging. Brent is aging is here.
You can't say "Hey Boomer" though, because I'm a Gen Xer, but you know, I'm getting there.
So just a couple more questions before we drone everyone lunch. Make sure to buy the Startup Society's digital coin in order to place your order. But just a couple more questions. Do you think that the development of major centralized digital banking in China puts a significant pressure on enterprises globally towards compatibility on some level with China specifically?
I'm a big advocate of One Belt, One Road. I've seen it in practice. My former bank had major operations in China and important jurisdictions for China. I'm very encouraged by the work that's taking place in Asia. As a banker, I have no interest in the politics of it. So personally speaking, I don't see it as a threat. I see it as a natural challenge to current orders. And I see it as a way to enhance trade capability and effectiveness from mid-age Asia east.
I think that it's worth watching. I think it will happen in China. China is leading the industry on many of the digital developments and blockchain and crypto. You need to watch to see what they're going to do. Whether it becomes an adopted world standard or not, I think is politically unviable at this point in the game. I just can't see that happening. But I think that China will pressure the rest of the trading partners to move at the same pace that they're moving. So I look at it as a good thing that China is going to pressure the rest of the world to come up with competing alternatives to what China develops. I do not see the world adopting everything that China has. Also, considering the current political crisis and COVID crisis we're in, that's not going to happen in the near term. But it will force people to react in the same way China's reacting.
You will see take up in certain developed countries where China has offset investment structures in place. So they may well seek repayment of existing infrastructure loans, etc., through the currency of choice that is dictated by China. But I would agree with Brent that west of Europe, we might not see anything other than a sort of competitive challenge rather than usage in the short.
So we have another great question from Kyle Kemper. Will you issue a currency basket DC? I assume so.
Bank. We have reviewed options over the last 3 years, actually, and there were a couple of Swiss initiatives that we were looking at that we were intrigued about. A lot of it's demand driven. At this point, there doesn't seem to be sufficient client demand for us to justify the expense of developing, managing, and operating those facilities. However, as I mentioned earlier, we, along with several other sort of leading digital banks, are always open for discussion. That's the purpose of sort of trying to evolve the financial services community. So very welcome to reach out, and our fintech guys would welcome a conversation.
I think this will be our final question. Do you expect any shorter term disruptions to the FX market? FEX market, sorry.
A short-term disruption to the FX market due to digital currency, central bank digital currencies? Is that what I'm assuming here?
Yes, it's in response to what you were saying before. He said, great point about the FEX industry. Do you expect any shorter term disruptions to the FEX markets? I personally don't see it happening anytime in the next 5 years. Okay.
Or are you referring to immediate sort of COVID issues?
He doesn't say, but if you have an answer to that, go for it.
Okay. Well, I think the issue is going to be if we start to see central banks printing money, say for the Fed, in especially developing countries, then we're going to hit a problem. We're going to hit an FX problem.
You're going to have a valuation. You're going to have a valuation problem of currencies and an inflation problem on top of that, particularly in emerging markets.
And we're already starting to see that in some of the restricted currencies. We're not in a hyperinflation position yet, but we're getting close to that in some of the environments that we're already subject to currency controls. I don't think we're going to see major changes in amongst the G20.
Okay, perfect. Well, gentlemen, thank you so much for your talk. What you're doing with special jurisdictions and banks and digital banking in general is incredibly innovative and is going to be very important for the industry moving forward. So thank you so much for your time, and well, excellent. I hope you spend time talking to some people here, answering questions, and let me know if we can help you in any way.
All right. Thank you.